It is it is absolutely awesome to be here on this midweek training call with so many of you. We've got over 150 people already coming live onto this call. This is going to be recorded and broadcast through our YouTube channel into our Telegram group. So please make sure if you got value from this and you know there are people in your team, in your community who would get value from this, to direct them to the newsletter, direct them to the Telegram groups, and make sure they watch these midweek training calls. So for those of you who are new, my name is Bruce Hughes. I am the GS Partners corporate trainer, and we host calls every single Wednesday, whether they're corporate calls to find out about corporate updates, marketing calls from our top marketers on best practice for marketing, or like tonight, trading calls where you get to meet with the head of the trading team from SkyGround. You get invited into the trading competitions, invited in to the academy and education process. Really, the focus once a week is to make sure that our community are equipped to move forward in the different marketplaces, the different platforms, the different services that we bring into our community. So just in the chat function, it would be fantastic if you let us know where you're dialing in from. Liam's going to be coming onto the call shortly. He's going to be walking you through tonight's training. But I'd love for him to see right now, as he's sitting here, to see how many countries, how many time zones, how many people have got onto this call to meet with him and get from him years of experience, concentrated, sifted, sorted, and given to you so that you can learn from his mistakes and his successes. That's an incredibly empowering position to be in. So have a look at this, Liam. We've got people from UK, from Canada. I've seen people from the US, from South Africa, from South America on the call as well. Awesome to see just a global community who gets so much value from these calls. Danny Jones, great to see you. Mangezi as well. Fantastic. Welcome to the call. So it gives me a huge amount of pleasure to introduce our speaker tonight. For those of you who haven't yet heard Liam, Liam has decades of experience in the marketplace. He works closely with our trading team. He has put together a systematic and structured approach to help people who want to learn about trading come into the trading space and succeed. He's also put together the support team who reaches out to you via email, who reaches out to you through calls and support to help equip you to win in this space as well. So I absolutely love that he gives up his time, that he's on these calls here in the trenches with the community, making sure that we are all equipped. So Liam, as always, thank you so much for your time. This is your call. We're going to take out our notebooks, we're going to take out our pens, and we're going to lean in and learn from you. Liam, over to you.
Amazing. Thank you, Bruce. Hey, everyone. It's great to be back. This is now the second of the regular, although I've jumped on a few calls in the past and discussed the offering that we have and the new enhancements that we've made to the trading system. This is now the second of a regular series of trading updates that we're going to be running through with you guys. So whoever was on the call 2 weeks ago, we discussed leverage and margin and what that means for you, and with great responsibility comes great power and what you need to do with that. And today we're going to move over a little bit and start to have a look at the basics of charts and some of the foundations of technical analysis. So we're going to have a look at what the charts mean, how you can read the charts, and more importantly, how you can actually use those charts to help you to make your trading decisions or to confirm the trading decisions you've come to from your fundamental analysis. So I'm just going to share my screen with you all now. I believe everyone can see this now. So as I mentioned, we're going to run through some of the charting basics. But really what we want to do here, as I say, this is going to be a regular series. So really today I want to lay the foundation for some of the future courses that are coming up, some of the future webinars that are coming up, so that you know exactly what we're talking about and you have a really good grounding. So if you're already very experienced in analyzing charts, You may hear today some of the things I go through that you've heard before. I think it's always good to look at it through a fresh set of eyes. But if you're a complete beginner, this really is the place that you need to be to start before you start kind of digging deeper into the trading strategies, technical analysis strategies. We really need to understand first exactly what we're looking at. All right. So let's have a look at some of the charts now. What does a chart show you and how can you use it? So as I mentioned earlier, in order to actually conduct analysis, we need some kind of technique and some way of actually examining the past and the present price behavior of a currency pair, could also be a stock, a cryptocurrency, an index, any of the assets that we're looking to trade. We need to have a look at the past and present price behavior to dictate where this price may go in the future and what trend it's on now. And this is today, we're going to start actually delving into this. So every trader who uses technical analysis, they must first get familiar with the chart. Okay, so all technical analysis is conducted on the chart. It's based on what the price of this asset has done previously. Therefore, for us to actually get an understanding of that and for us to start applying technical analysis to our trading, first we need to understand, how do we read this chart? What is it telling me? And this is what we're going to go through today. So a chart basically is just a graphic depiction of the price of a currency pair or any other asset over a certain time period. Now, I have some slides today that I want to run through with you guys, but we're also going to jump back and forth between the slides and the trading platform itself, so you can actually see that in action as well. Firstly, let's have a look at a couple of the different chart types. So we have here the line chart. I'd like to describe this basically as the margarita pizza of charts. Okay, if margarita pizza is your favorite, fair enough, that's fine. For me, it's a little bit basic. I prefer, a barbecue meat feast, something with a little bit more filling. And we're going to go into how this chart equates to Liam talking nonsense about pizza right now. So the line chart really is the most basic of charts, to be honest. It's not something we're going to spend too much time on at all because it's very, very straightforward. But every kind of chart type does have its uses. Even a margarita pizza has its uses. It's the base that everything else comes from. And it's the same with a line chart. So the line chart simply draws a line from one closing price to the next closing price. As you can see here in the image, we can see the overall price development of a currency pair over time, simply by connecting its values with a line. So here we're looking at, and this is something, once we flip over to the actual platform, I'll show you how you adjust this. But this is over the course, as you can see, of a few days. We have here the 15th of February, the 16th of February, the 17th of February. And very clearly, it just shows me, if you look along here on the right-hand side, you see the price, just what the price movement has done. So if I want to get a very, very basic view of what has happened with the price of an asset over a significant period of time or over any specific period of time, maybe the line chart's what I go to here. But if I want to see what actual trends or what happened to create that price or what happened in between, I'm going to want to have a look at some of the other chart types, which we're going to look at in more detail today. So basically, as I mentioned earlier, the line chart is very easy to understand, right? We can see the price along here. We can see the corresponding time and dates. And very simply, this is the price that was reached during that time. So but it doesn't give us much information about the price behavior over the course of that time. How many times did the price go up and down before settling here during this period? How many times did the price go up and down before settling here in this period? This is what we're going to delve into a little bit more today. So we're going to see exactly how we can read between the lines, no pun intended, with the line chart, how we can read between the lines and actually see how we got to this stage, what was happening in terms of, trading volume and supply and demand changes, which we've spoke about before. And I make no apologies. I'm going to continue to speak about changes of supply and demand. You'll learn that the more time you spend with me, there's nothing in trading that I will talk about without referencing changes in supply and demand, because it is the only thing that changes the value of anything. So, as I say, we don't get to see much information about price behavior during the course of the time, but nonetheless, it does make it easier for you as a trader to see the trends and just the closing prices over a certain period of time. So it's typically employed just to get the bigger picture of the overall price movement. If I just, before I move on and delve into some of the more detailed and exciting charts, I'll just jump over now to the trading platform. As you can see here, we are currently on candle charts, which we're going to touch on in a moment. I don't want to jump into that too soon, but we can move across here to line. We can change here at the bottom left. So this is why I want to jump over to the platform every now and again, because as well as going through the information that I've prepared for you guys today in relation to the different types of charts and what you need to know, I also think it's very important on these calls just to get some time to get comfortable with the platform. You know, I know that I've probably spent a lot more time on this platform than all of you guys. So certain things that are a second nature to me, you may not even have noticed that are there yet. So just to be clear, here in the bottom right-hand side, this is where we change the view of how much of a space of time we're seeing on the chart in front of us. So if I want to see performance over the last 5 days, you can see here from the 17th of February all the way through to right now, the 22nd of February. Same if I want to see 1 month, 3 months, 1 year, 5 year, etc. Back to the line chart here. And as I say, I'll just get a very simple depiction of what the closing prices were at these various time points throughout the last week. Okay, not too much more to say, to be honest, in relation to the line chart. Very, very straightforward. We might come back to this a little bit later because it is a little bit more useful when paired with some of the other tools that we're going to discuss today. Another chart type that I want to move on to now, this is the bar chart. So to be honest with you guys, this isn't my preferred type of chart, to be honest, to actually use to analyze the markets, but it's the best chart to use to explain how the charts work. So it's actually very simple, similar to the candle charts, which we'll touch on in a moment, which is my favorite to use, to be honest, and is the favorite of most people that I know, most traders, or most of my friends that trade. They use the candlestick. Most professional clients that I've spoken to throughout my career like to use the candles as their main point of reference. But one thing I found is they need to be knowledgeable about the other charts because they do like to switch between dependent on exactly what they're trying to see. But the bar chart, as I say, is very similar to the candles, which are very popular. There is some slight differences, and as we kind of bounce between the two, I might go back and forth just so you can see those, because ultimately the candle is probably what the information that we're going to discuss today that you get from a bar chart, you also get from the candle. That's probably going to be where you end up getting the information. But to teach, I like to use the bar chart first of all, which then allows you to understand the candle. So a bar chart, what this shows us is, yes, the opening and closing prices that we see on the line chart that we looked at earlier, but we also see the highs and the lows during that period. So this allows us to see the price range and exactly what happened during that specific period. Now, when I talk about periods here, I'm going to jump back to the chart because we looked at here in the bottom left exactly the period that we want to see on the overall chart. But if I jump to bars now you can see here, we haven't gone into detail yet as to exactly what these mean and how to read them, but they look very similar to what I've shown you on my slide, right? Each of these bars, the time period that they represent, which is what I was just talking about, the highs and lows during a certain time period, that's dictated by you on the platform. So here we have the overall view of what time period we want to see on the chart. But if we click here, this is what each bar represents. So it's important to know this because, like I say, we're going to bounce back and forth. I'm not going to go into it in too much detail with the intervals here, but it's important to know that if I switch to 30 minutes, my default settings are on candles here. As I mentioned, it is the one I like to use, so it keeps switching back. But here now, each of these bars that we see represents 30 minutes. If I change this to 1 hour, each of these bars now represents 1 hour. If I change this to 4 hours, each of these candles or bars now represents 4 hours. Okay, bear that in mind. It's going to be important as we move forward. So as I say, the bar chart helps you to see the price range of each period. The period is which we dictate on the actual platform itself, what we've chosen through the charting tool that we provide to you guys. You choose that period. It's not set in stone. Now, depending on how far away or how long-term you're thinking on your trading, this is something, again, that we're going to, interval trading, we're going to talk about in later sessions. But depending on, which section of the market, which time frame you want to analyze, you'll use different periods at different times. So going back to the bar chart, this is what it looks like. We saw that on the platform earlier, right? This is now, let's say we chose 1 hour. This is between 4 and 5 p.m. today, okay? Now, this line here, this vertical line, we have the bottom, we have the top, okay? The bottom shows us the lowest traded price during this time period. So remember I said this is 1 hour we chose here. This represents 4 till 5 p.m. Central European time today, let's say. So now we see here, what was the highest price? Remember, we have alongside the right-hand side here, we have the prices. We have the highest price during this period, and we have the lowest price during this period. And then we have the hash on the left, the hash on the right. This is indicating the opening price during this period. So as soon as the clock struck from 3:59 p.m. to 4 p.m., this was the price here, what we see on the left-hand hash. Remember, on the chart, if I just jump back here now, on the chart, we have the price alongside us. So let's look at this bar here in specific. Here, we have the hash on the left. Let's go full screen here. Here we have the hash on the left. This is what the opening price was at 8 p.m. on the 21st of February. This is Cyprus time, which is where I am at the moment. We have 8 p.m. The opening price correlates directly here, 1.06615, okay? Or a little bit higher, 1.0641, okay? So now we know exactly what the opening price was at that time. And you probably guessed it, the hash on the right, this indicates the closing price during that hour. Now, I'm going to, a bit of a spoiler alert here. I'm going to jump ahead because I told you guys, this is really important. I told you guys that the bars and the candles are correlated. So once I start to teach you the bars, then you start to understand the candles. As I'm on the chart now, I just want to show you something. You'll probably notice it with your own eyes. If I switch from a bar chart to a candle chart, the only difference on a candle chart is that this area is filled in. Okay, this is why I say it's very, I like to use the bar to teach, because it makes it very, very simple to actually see the opening price here, the closing price here of the period that we selected of a 4-hour chart. So at 8, this was the opening price, and at midnight, this was the closing price. Okay, we've jumped now to a different bar, but you get it over a 4-hour period. Now, if I switch to candles, it's just filled in. But it gives, the reason I like to use it is it gives us a very good visual representation of whether the price was higher or lower. And we have the colors here, which we'll jump over to in the next slide, and I'll explain exactly what that means. But just going back to the bars for a moment, just to clarify here, because again, this is working the same way as a candle. This area was filled in here. It'd be the same as a candle. We see on the left, the opening price, on the right, the closing price. A lot of information at the moment, and not necessarily practical on how to use it. Don't worry, it's coming. And all of this is important to help you get there in the end. So now we move across to the candlestick chart. We just got a bit of a sneak preview of this on the platform itself. The candlestick chart is a variation of the bar chart, as I mentioned. And basically it shows the same information, but in an easier to read format. So the body of the candle, which is this area here, shows the opening price and the closing price, okay? Or in this case, the opening price and the closing price, because it's green. We'll touch on that in a moment. So a candle is shown as green when the closing price is higher than the opening price. Sorry, the closing price is higher than the previous opening price, and red when the closing price is lower than the opening price. Okay, so this means here in this case, we opened at whatever this price is representing. Remember, we have the prices on the right on a real chart here. On this one, this will be the opening, this will be the close, because it's red. So this means the price went down from the open to the close. Whereas on this candle, the price opened here and closed here. So remember, if you have the prices running alongside the right axis here, what this means is the price over the period that we selected for this candle closed higher than it opened. Okay, I hope everyone's following me so far. We have the opening price here, the closing price here, which was higher. Therefore, it's a green candle. When we see a green candle, we know to read it from the lowest to the highest. When we see a red candle, we know to read it from the highest to the lowest because it's closed lower. Okay. Now, maybe we jump back to the chart again quickly here. So you can see, let's see this in action. If I go full screen, we see this candle here. Okay. We know this is green. So we know that the price opened during this period, this 4-hour period that we've selected here, which is between 12 and 4 p.m. We know that the price opened here 1.06360 and it closed here 1.06406. Hence this candle being green. And this means that, as I say, the opening price is lower, the closing price is higher. Then we see directly next to it, of course, as this is a 4-hour period, and the next candle is starting directly after the period, the 4-hour period of the previous candle closed. Right next to it, we have the opening price. Again, this is a green candle because the closing price was way up here. Again, opening price, closing price way up here, green candle. But as we go to the red candle, there's a bit of jump in time here. Okay, this was overnight, which is the reason that this doesn't directly correlate to here is we had a change of day over here. But as you can see, the price opened here on the following day. It closed down here, hence it being a green candle. And then so forth here. The price closed here. So therefore, it opened at the same price on the next candle. But as the price closed lower over that period, this is now a red candle. So we have the opening price at the top, closing price at the bottom. When you have a live candle, as you see here, it's changing. We don't have extremely volatile markets at the moment, so you're not seeing a lot of movement. But you're seeing a slight price movement here, which is starting to form the candle during this period. It's a 4-hour candle, so the small changes in price aren't making a big impact right now, unless the markets are super volatile. But you can see this candle start to be formed. If the current price goes lower, then this will turn into a red candle, and we'll see that switch around. You can also see here what can be referred to as the candle wicks or the candle shadow, depending on who's speaking. But you can hear it referred to as both. It means the same thing. You have the wick and the shadow. So here we have the range of the price during this period. Now, this is quite important to understand because it's showing us now while the price opened here and closed here, as it's a red candle, we open at the highest point, we close at the lowest point. During this 4-hour period, the price went as high as 1.06878 and as low as 1.06420. Now, as it's quite an even up and down wick here, or up and down shadow, what this can start to tell us is the market was pretty volatile during this time. You know, there's a big movement up, there's a big movement down. It's still closed within that range, but the market wanted to do more. So there's more news happening here. We could potentially see a change around in the trend now that I zoom out and we see what's happening right now. We do start to see. Now, remember here, I'm going a bit off topic, but this is what I wanted to do today on this platform. I'm looking here at 4-hour candles. Okay, this is G-Euro USD. This is the asset. I can have a look at the exact same asset with a different period. If I want to see, so I'm getting a picture now of what's happened over the last couple of days, but if I want to trade right now and I want to trade short term, I might want to jump to 30-minute candles. All of a sudden, this price starts to look a lot different. Why? Because what was contained in one 4-hour candle previously is now spread out across multiple 30-minute candles. Okay, so here we'd have to take 8 of these candles, and the average of that would be a 4-hour candle. So now I get more of an idea, and the lower I go in this, I can see exactly what's happening in the market right now. So over the last 5 minutes, 6 minutes, nearly 7 minutes, the price of G-Euro USD has gone up. Okay, so at the close of each minute so far, each minute has closed a little bit higher, a little bit higher, a little bit higher. Now, how relevant this information is over the space of minutes is dependent on how I want to trade. And this is something that, as we start to talk about trading strategies in the future, there's things like scalping, where you do high volume trading, large positions, but over a very short amount of time, just to take off these small movements like we're seeing here. But then also you have longer term trading, where you want to place a position and you don't want to close it, or you don't want to reap the profits that may potentially come until a few days' time, because you're anticipating a future movement. Then 1 minute candles aren't going to be useful for you. What 1 minute candles are for is what's happening in the small market right now. Whereas if I change this over to a 4-hour candle or a 1-hour candle, I'm going to get much less of a picture as to what's happening in the shorter term. So it's really dependent on how long you plan on trading for and what information you actually want to get. So right now I can see, as I say, over the last 5, 6, 7 minutes, it's Euro USD is continually trading up. As I was mentioning earlier, with the when we see these shadows or wicks that are extremely elongated, in this case here, we see less shadow in the upper half, and we see more shadow in the lower half of the candle here. So what this is telling us is the price did drop down, but there simply weren't enough people selling to sustain that price over a period of time. And this is why the price shot back up. Then we saw a drop again. But it seems like there's simply not enough sellers in the market to sustain this price drop over a short period of time anyway. Now, this brings me on to the next point, which we'll jump back onto the slides for, which is support and resistance. Because I mentioned earlier, we may see here as the wick starting to break, as the value of the asset is trying to change, but is not quite. This would be very straining on the eyes to do on a candle by candle basis. So this is why a lot of traders use support and resistance as the basis to see what these levels are, where maybe there's not enough buyers to maintain a price at buying, or there's not enough sellers to maintain a downward trend. So people use support and resistance lines across the charts in order to see this. So now that we get the basics of what each individual bar or candle may be representing, and what, where we want to change the intervals to see that. Now we start to learn a few techniques and a few strategies that make this easier to see. So support and resistance, as I mentioned, is one of the most widely used concepts in trading. Again, this is completely foundational stuff. From the back of the basics of support and resistance that I'm going to go through with you guys today, there are also tens and tens or hundreds even of strategies that you can use support and resistance in different ways in order to make your trading decisions. But you can't use any of them until you understand the basics of support and resistance. So technical analysts will use support and resistance, the levels, to identify price points on a chart where we may favor a pause in a trend, or even a reversal of a trend. When we say a trend, we mean the asset is continually going up. At some point, it can't go up forever, right? So we need to understand, when is this trend going to pause, or is it going to reverse? Because we either want to, if it's still in the middle of the trend, so say the asset's going up, we want to ride that wave a little bit, right? We want to buy in the middle and we want to keep going up. What we don't want to do is buy when the trend's at its absolute end and the value of the asset's about to turn around, because everybody's already made all their profit from buying, and now people are going to sell to get their profits, or there's simply just not enough buyers to maintain this growth in price. Okay, so this is where support and resistance levels come in. So support occurs when a downtrend is expected to pause due to a concentration of demand. There's too much demand to actually continue this downward trend. As we see here in a very basic diagram, when the value is going down, we have this support line. This will make more sense when I go through support on its own in a moment. But basically, this is the level that we don't expect the price to break through. Therefore, we could see a bounce back. If we do see a breakthrough, though, now this is going into slightly more advanced territory that we're going to do in the upcoming training calls. But if we do see a significant breakthrough in that support level, that's when we start to then look at, okay, the trend has actually reversed. And now I'm going to set a new support level, and maybe I even want to ride that trend down a little bit as well. Resistance is just the opposite of that. It's where an uptrend is expected to pause or reverse because there's simply too much supply now, or there's not enough buyers. There's not enough demand to outweigh the supply. So as I mentioned before, just to go back, for anybody that has never learned this before, hasn't been on the previous calls that I've done, the value of anything only changes once a value of supply and demand, once a change of supply and demand, occurs. Right. This is the same with anything in life, whether you're trading, just looking at the prices of assets on a platform, or you're physically out and about in your daily life buying and selling. The value of something will not change unless there has been that change in supply and demand. So, the example I used on a previous training call was, if you're in an airport and you want to buy a bottle of water, I spend a lot of my life in airports and always, because you can't bring water through security, of course, always looking to buy a bottle of water once I get there. Normally, you're looking to spend, I'll use British pounds here, £4 to £5 on something that would cost 50 pence, 50 cents in a shop, right? The reason for that is I have a demand. I'm thirsty. I want some water, but the supply is extremely limited. I've gone through security. I can now only buy, let's be honest, it's always WH Smith in the airport, right? And wherever you are in the world, there's a WH Smith that wants to charge you $5 for a bottle of water. But basically, I can only go to WH Smith or a couple of the other shops in the airport in order to buy that water. So supply is low, but demand is high because I'm thirsty. I want something to drink. So they can charge that higher price. Once you start to think about this is the same across anything. And it's the same when it comes to analyzing the charts, because if we have a trend that's going continually upwards, that will only change, that will only turn around once there's a change in supply and demand, or once all of this demand now has been used. There's now not enough supply potentially to keep up with the demand that can push the cost higher. As we've seen, when things are out of stock, the value of them grows, and there's not enough supply to keep up with the demand. But if the demand isn't there to continue that growth, because to continually grow, we need more and more buyers. The more people that are buying an asset, this is what supply and demand comes down to ultimately. How many people are buying? More people that are buying an asset, the more the value is going to go up. The more people are selling an asset, the more the value is going to go down. And support and resistance is helping us set these levels within the normal market movements of what we've seen, based on what we've seen in the past, because we can only base this on previous historical price movements. Based on these movements in the past, what kind of levels am I looking at here before the demand starts to waver and there isn't enough demand for it? Now, as well as it just being data, we're just looking at previous price movements and previous facts that have happened. Also, support and resistance can be quite powerful, because as I mentioned here with market psychology, because I'm sitting here now telling you guys about support and resistance levels on a chart. I'll show you in a moment exactly how to draw these levels on a chart as well. You may go now and draw your support, draw your resistance levels on your chart, but so are hundreds of thousands of other traders. Okay, they're setting them same support and resistance levels. Now, as I mentioned earlier, the value of things only change by the amount of people that are buying, the amount of people that are selling across world markets, right? Not just through our platform. This is across the world markets. So when essentially all traders are looking at these same support and resistance, they're also operating within these parameters, right? They start to see we're getting close to the support here. More of the traders that are actually using this to trade may decide, okay, I'm going to buy. Okay, it's reaching the support. I'm going to buy because it's going to bounce back. This is why it's called support. Okay, it's going to hit that support. It's going to bounce back. Now, if all traders are thinking this, it's much more likely to happen, because what are they going to do? They're going to buy and it's going to bounce back. It's the same as what I've always called the Warren Buffett effect. If anyone knows who Warren Buffett is, he's one of the most famous investors in the world. Talks very openly about which assets he's investing in. I've never had this confirmed, but I think one of the reasons he talks very openly about it is he's a very smart man, and he knows that if he's Warren Buffett and he says, okay, I'm going to buy half of my portfolio is going into Apple stocks tomorrow, what's everyone else going to do? Well, if Warren Buffett's buying Apple, if he's putting half of his investment portfolio now, he's selling it and he's buying Apple, I'm going to buy Apple. And if everybody following Warren Buffett suddenly buys Apple, what's going to happen to the price of the Apple stock? I mentioned earlier, if everyone's buying a certain asset, we expect the value of that asset to go up. If everyone's selling an asset, we expect the value of that asset to go down. So Warren Buffett almost can give himself a bit of a guarantee of a certain bounce once he buys an asset, because everyone else is going to buy it too. Elon Musk is another person with that power, right? When he tweets something, you see the value of it shoot up. If he tweets negatively about Tesla, we see the value of it go down, because people are thinking, okay, if he's thinking this is how I'm going to act. So when trading, the point that I'm making here, I've gone off on a bit of a tangent, I know, but the point that I'm making here is we're looking at technical analysis, but it's not a kind of guaranteed science form. It's not a guaranteed way of measuring things, because really what's moving the market, as well as the fundamentals, which is what's driving this volume, okay? The fundamentals are basically what causes the effect of people to go out and buy, go out and sell. But because people are working within these rules, we need to bear this in mind when we're actually conducting our analysis, is what are the market thinking? Because you need to go with the majority of the market sometimes in order to follow that movement. Now, if everybody's looking at support and resistance levels, they become even more prevalent because everybody's trading within them and they're much more likely to occur. I hope that makes sense to everyone. Now we're gonna take a quick look at support. So support in specific, this is, prices are declining during a downtrend when there is an excess of supply compared to demand, right? This is what we talked about earlier. This is the opposite of the airport experience I talked about, where there's an excess of demand, I'm thirsty, but there's not enough supply, right? Whereas we start to see a downtrend, we start to see the value of an asset go down when there's an excess of supply compared to demand. An example for that could be, I don't know, a new MacBook comes out, or a new, let's say, the PS6, the PlayStation 6 comes out, right? Everybody who owns a PlayStation 5 is going to be online on eBay or whatever, Amazon, whatever they're using to sell products. They're going to go online, they're going to sell their PS5 so they can buy the new PS6, right? These are the trends that we see in retail market all the time. The value of the PS5 will be a lot less in the used market once that PS6 comes out than it was prior to the PS6 being announced. Why? Because everyone's suddenly selling their PlayStation 5, and in order to find a buyer, you need to be competitive with your pricing. Again, this is just a real kind of world example that everyone, I think, can relate to. Same with cars, when everyone's selling, in the future, diesel cars, because the government are putting all sorts of taxes on diesel cars. Well, the used car market for diesel cars is going to be a lot less, because as these taxes get higher and higher and higher, more people are going to start selling their diesel cars. Therefore, you can ask for less on the market, which means the value of it's gone down. Okay. Again, this is just another real world example. But this is exactly how it works in the market. So the price is declining during a downtrend because there's an excess of supply compared to demand. So for those holding out to purchase an asset, we've probably all heard the phrase, buy low, sell high, right? This is when it comes to stock trading or trading any kind of assets. Same with currencies. This is one of the most used phrases, right? This is the ideal world for everyone. You buy low, you sell high, okay? Because you're pocketing the difference, right? If you buy at a low price, you sell at a high price, you're pocketing that difference. So this is what everyone seems to do. Now, demand that has been gradually rising will eventually reach the point where supply and demand are equal, which causes a pause in the trend, or even a switch around now where the demand is starting to outweigh the supply. Now, how we measure this level, this is called support. So here, something's got a bit wrong with this picture here, apologies, but there should be prices on the side here. But we can see here, this is an example of a support line, okay? So basically a support line we'll always see at the bottom, a resistance line we'll see at the top. This support line here, and this can be drawn onto the chart by yourself, has just been based on what's happened previously, because this trader who's currently here, this is where the price is at the moment, live on their chart, but they're looking at the historical price movements, and they're seeing that the price has a difficult time falling below the support of $51.25. Okay, so this is this will be a stock at this price, so you'd imagine. So this stock here, every time it gets close to this 51.25 price, it seems to bounce back. Why? Well, there's not enough sellers. There's not enough people selling on the market in order to get this price any lower. Now, to just kind of touch back to technical analysis, which we've discussed in the past here, one thing I would do, because I mentioned before, anyone who's joined any of the previous webinars that we've done, especially the one where we talked about technical and fundamental analysis and when to use them, I always mention it's good to use them both together. So for instance, here I'm seeing, so this support line isn't going to remain forever, because we see 2 years ago stocks that were at a completely different price, right? So if I start to think maybe the price here, we can see, let's just say this is a 1 year period. Over the last year, we see the price, it hasn't managed to break through that support level of $51.25. Well, when I look at the fundamentals, for something to change in the technicals, something that's never happened before, let's say, or hasn't happened for a very long amount of time, then when I'll look at the fundamentals, I'll say, well, to cause that, something must have happened fundamentally that's never happened before. If something has happened fundamentally that has never happened before, then of course that support level can be broken, because we're in uncharted waters here. But if it's just business as usual, maybe this company had a bad earnings report at the end of the quarter. They didn't have great sales, but that's also what happened at this quarter. That's also what happened in this quarter. And every time, it's nothing massively alarming. Every time this has happened, the price has gone down to here, it's bounced back. Well, I can be a bit more confident. The saying is that history repeats itself, that unless there's something new that's happened fundamentally, the same is going to happen again. So what I'll do is I'll wait for it to get to around this price here of $51.25. Maybe when it gets to $51.50, or just below $52, then I'll buy. And if I would have done that at this point, then you can see now the price is $56, $57, and at some point here was over 60. So I could have got that benefit depending on how many stocks I bought, over and over again. It's a big percentage increase in the actual position. So this is an example here of how support is being used. So support can be a price zone or a price level on the chart. If you want to use a zone, you can just use a bigger shaded line that if it falls anywhere within this line. I like to use a solid line. And this displays the readiness of buyers to purchase. So as I said earlier, we may not have enough sellers here to maintain this price going down, but also very importantly, as I mentioned earlier, people like to buy low and sell high. So and going back to the earlier point of, other traders in the market are looking at this support line, we can be pretty confident that unless something fundamentally has changed, we can be pretty confident that as the price gets back down to this support level here, not only are they going to struggle to break through that and get any lower, because nothing, is fundamentally different this time in the asset that I'm looking at. But also we know there's going to be a load of people in the market waiting for it to get close to this price to buy. Now, if 50% of the people, let's just say we had our own asset here, we're trading in our own environment, only between each other. Well, if more than 50% of the people on the call decided to buy once this asset got down to here and we're only trading between each other, then the price is going to go up, right? Because everyone's now buying. So that demand is there. When the demand is there, the price is starting, as demand rises, the price rises. So if everyone's waiting for this support level to be hit here, and then they're looking to buy the asset, then we can expect that, that this support level probably isn't going to be broken through unless something fundamentally has changed. And this is what people are using support levels for. So this is support. In terms of resistance, we're looking at the same, opposite. Okay, so it's the opposite of support. Prices are moving up when there's more demand than supply. WH Smith's, I'm looking at you in the airport, spending $5 on a water. This is the example here. Okay, so the demand is very, very high. Demand's moving quicker than supply, therefore the price is going up. As the price gets higher and higher and higher, it will get to a point when selling will overwhelm the desire to buy. There's a couple of reasons this may happen. Prices could get too high for new people to enter the market. If we go back to the earlier one, a stock at lower prices, a bit easier to explain this. If we had here per share was $50, now per share is $60, people might think, okay, that's a bit pricey for me to be buying a number of shares at $60. I'm not going to do so. The price has got too high. It could also be, and I think I touched on this earlier as well, it could also be because we had a number of people that caused that initial price raise. We had a rally, what we call a rally of buyers. So we had a rally of buyers here, buying the asset, pushing the price up, pushing the price up, pushing the price up. For them to realize their profits, they have to sell that position at some point, right? They have to close their position. They have to take their profit. So often what we'll see is, again, this is slightly off topic, but I think it's useful information. What we'll often see when there is a big rally of price going up, we'll see the price going up, 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 up. Then it might come down a bit, and then it will start trading at this level, which is still much higher than what the price was before we had that giant rally upwards. Okay, but at some point, a lot of the people who bought here are going to sell. So once they've reached their price, once they've reached their target, they're going to sell, which is going to see the price, if enough people are doing it, if enough people are selling, we're going to see the price come down. So the resistance lines, they're drawn to see, okay, at which point, based on the previous price, movements, we're only looking at what's happened in the past here, based on the previous price movements, at what level, at what price are traders likely to start either selling, or is it going to get too expensive to buy? Because at that point, we expect to see a reversal, or we expect at least to see a pause in the trend of the asset going up. So if you have both built on your chart, you have a resistance line, you have a support line, and you have what's happening in between, you can start to see, you might want to trade shorter movements, day movements, based on the candles that we looked at earlier, on the midterm in the market. But if you'll constantly have that support and resistance there as well, you can start to see, when are we getting close to these levels? And maybe that's giving me an indication that a turnaround in the trend is more likely. So as I mentioned, the idea is spotting on a price chart the level at which the supply starts to overwhelm the demand. Okay, everyone's buying, but we're getting to a certain price now where there's maybe there's people that want to sell, but there's not many people that want to buy. Therefore, the price has to come down. And this is how values change. Okay, this is the resistance level. So think of it as support, you hit, you bounce back off. Okay, it's like if there's a fire in a building and the fire brigade have those big bouncy blankets or whatever. I've never been in a fire, but I've seen it on TV. Big bouncy blankets or whatever they may be. They're supporting you, right? As you're coming down, you're bouncing up off them. But if there was another layer of bouncy material at the top, this is your resistance. This is not letting you get through that. You're bouncing back, but the support is there to help you bounce back up. And normally what we see in the chart is the price moving between these two levels over a period of time. So let me just jump back over to the chart quickly before I finish up, because what's important here is to show you. Now, I'm not going to go into in depth of looking at this specific asset right now and what the resistance levels have done in the past. This is what's coming up next. What I want to show you in 2 weeks' time from today is, I know it's getting dark. The light on here. I know it's getting, in 2 weeks' time, we're going to go through a lot more detail. We've got into today exactly what things mean. You guys are probably hungry now, like, Liam, can you show us, how can we use this to make money, etc. But it's important to actually spend a bit of time now understanding, having a look at these levels, maybe having a look at what's happened in the past. This is a good way of seeing, prior to investing, actually having a look at what's happened in the past. If I would have set my support level here, if I would have set my resistance level here, what indication would this have given me? And how to draw that onto the platform, you can very simply just click here, a straight line. If I want to set, let's say I want to set my resistance level here. I very simply just, do so like so. Okay. Now this button here locks this into the chart. So when I log out and log back in, this will remain there. And now, as you can see, we've obviously done it over a small period. But we can extend this out back in the previous view as well across the whole chart. Now I know that this is my resistance level here. Okay. So this is the basic tool that you want to be using on the chart. There's a number of different tools here to see things in different ways, which I'm not going to go into today. We'll go through these in more detail as we get along this course. As I mentioned in the past, we're also looking at launching a training academy for you guys so that you can, if you don't want to wait 2 weeks for each session and to be fed this information, then the training academy will come very soon, where you'll be able to access a load of information on demand. But also what I would suggest is reach out to our support team. Now, I did have a bit of feedback earlier in the week that a couple of people didn't know exactly where to find this. So I've had a chat with our tech team. We're going to have a move around of the UX, but if I just go back to the dashboard really quickly, while I'm here on the call with you guys, I think this is important to show. So the support callback function was originally set up to support the trading competition only. What we're seeing now is a lot of people, want to manually trade, they want to copy trade. They are getting involved in the competitions, but people are having different, multiple accounts within the dashboard to do different things. That's fine. But because of that, we actually built the request callback feature within the tournament. So if you go to, as of right now, the tech team are working on changing this. They're going to move it over in the next couple of days to the support area here. But as of right now, you click on enter competition, click on any of the competitions that you see, whether it's the current one or one that you previously entered, and then request a callback, and you can fill out the information here. Okay. What I would suggest is if you want to learn more about how to read the charts, more about support and resistance levels on a one-on-one basis where somebody can sit in front of you, open up the charts, show you, draw the lines with you and show you exactly what everything means. Maybe go through a bit slower and in a bit more detail than I have today. And then I suggest you request a callback. One of the team will get in touch and they can do that session one-on-one with you over Zoom, over Google Meets, or over a simple phone call, whatever you guys prefer. Okay. Now, just to recap on what we've gone through today, there is more than one chart type for a reason. Maybe I was quite disparaging towards the line chart, calling it the margarita pizza of charts. But actually, one point that I didn't touch on, but where a line chart could be actually quite useful is if you set your support and resistance lines and then have a look at a line chart, you're only seeing the opening and closing prices there. So you're getting a bit more of a compact view rather than seeing the overall highs and lows that you see for a candle wick or shadow, as we mentioned earlier. A support level, we touched on support and resistance. So a support level is a price region in which the demand is too high to sustain the current trend. Okay, this is, again, simpler terms, fire, jump out. The support level is what's stopping you go any lower than the let's call it the magic bouncy blanket that the fire, I don't know what it's called, no idea. The magic bouncy blanket that the fire team have, that's your support level. It's stopping you from going any lower. Your resistance is that bouncy material at the top that's stopping you going any higher because simply there isn't enough demand to maintain that trend. Okay, this is just giving us an idea of what's going on in the market because, as I mentioned earlier, it's really important to understand market psychology and what other people are thinking because truly that's what's moving the market. Understanding support and resistance is the basis for a lot of technical strategies. This is what you need to understand first because there are a lot of strategies that actually sprout out of this, and all of them, when it comes to technical analysis, depend on the charts. So it's important we get this session in first, and then we move on to some of the more advanced stuff further down the line. And as I mentioned earlier, the real power in support and resistance is a lot of other traders will also be following this. This is one of the kind of most solid things that people look at. Well, as I mentioned earlier, one of the foundations for technical analysis. So a lot of people are following it. This makes the support and resistance levels even stronger. It's kind of like a false economy in a way, the same way that I say if Warren Buffett says he's going to buy a stock, the value of that stock's going to go up, guaranteed, because loads of people are going to go out there and buy it. If Warren Buffett says the value of a stock's going to go down, very good chance the value, if Warren Buffett says he's going to sell a stock, very good chance the value of that stock's going to go down because people start selling based on what he says. It's the same with support and resistance. If people are looking at very similar support and resistance levels based on what's happened previously in the previous price movements, as we see here in this example, very rarely or not at all in this chart has the price ever dipped below 51.25, which I promise you was the price there before the image got messed up. And therefore, this will also be a lot of people's support line. So therefore, once the price reaches down here, we expect anyone that's trading on the basis of these support and resistance lines to take the same actions as well, which in turn has an effect on the market. So it's really important to understand the market psychology as well and what's behind it. So this is pretty much it from me today. Again, we've gone through a lot, but not a lot. because if you're completely new, I'd imagine that this, is quite a bit of information. But at the same time, we haven't gone into the depth of exactly what these things can do and what we can do with this information. But first of all, it's actually really important how to get that information. So once you know how to get that information, in 2 weeks' time, we're going to go into more depth about trends. Trends are really important, something called trend lines as well, how you can use them to actually see support and resistance over a longer period of time as the trend changes. And we'll delve a little bit more into that technical analysis. And along the way, we'll also dip back to fundamental analysis, because it's always good to check what you're seeing technically with the fundamentals. Okay, what's going on with this company if it's a stock, this country's economy if it's a currency, etc. for the different assets. What's going on in the fundamentals there that could be causing what I think I'm seeing here on the charts when I'm doing my technical analysis, or vice versa. You could be conducting, you could be looking at the fundamentals and be like, okay, I'm going to confirm this with the technicals. So as we go through, I think the technicals are a really good basis for us to base these sessions on now moving forward, but we will bounce back to the fundamentals as well, just to see how you can double check those for confirmation as well. So the next session will be 2 weeks from today. We still have competitions running throughout this period as well. So if you haven't got involved, maybe this is a really good time for you to try out some of the things we've discussed here alongside the competition. And if you need more information, if you want to delve more into this, then please do request a call back. One of our team will get in touch and they'll be able to go through with you one-on-one as well. Okay. Thank you very much, guys. That's all from me today.
Liam, thank you so much. That was an incredible call. You gave so much value in just 56 minutes, which is insane. I don't know if you've been watching the comment section, the chat section, but everyone's just saying thank you so much. Brilliant call. You've also got a lot of people who have said they're going to be reaching out to you and your team using the callback function. So expect a flood of messages and appointments to get up and running. We just want to say, as always, thank you to you and the SkyGround team. You guys really are absolute professionals in what you're doing. And to all of you here on this call, we'll be posting this recording into the Telegram group. So be sure to share it into your communities, especially those people in your communities who've shown an interest in learning how to trade. We'll see you all next week on our community and corporate call. Have a fantastic Wednesday, wherever you are, and we'll see you all soon. Cheers.
Bye, guys.